Welcome back, financial investors. My name is Brent, and today we're going to be doing our stock market weekly recap for August 19th through the 23rd, 2019. We're going to start off this video by taking a look at last week's changes for the week, the percent change for the S&P, Dow Jones, and the NASDAQ. Then we're going to jump into this week's changes for the week. We're going to go over the four main indexes, the percent change here over the past 5 days. We're then going to jump and take a look at stock futures, which are currently negative going after the hours. President Trump came out tweeting that he's going to be raising the tariffs from 25% to 30% now on Chinese goods. And also he is going to possibly in the future raise the other tariff on other goods from 10% to 15%. That, of course, is going to have a negative effect here over the weekend. So I do expect Monday to be a bit negative and could possibly be a good opportunity to buy. Now, we're also going to jump and take a look at the entire S&P 500 performance here for the week. What stocks were up, what stocks were down, what sectors were weak, what sectors were strong, and then measure the overall performance here with, of the total market. And then we're going to jump and take a look at semiconductors, financials, home builders. Then we're going to jump over into the gold, silver, the dollar, oil, and then wrapping it up with mortgage rates and what was posted this week here on Facebook. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, and real estate. If you enjoyed this video, find it helpful, hit the thumbs up. And if you have any comments or questions, drop it into the comment section below. I do read and reply to all your comments. And of course, thank you all here for tuning in. Let's go ahead and get into the video. I'm going to go ahead and flip my screen around here and go ahead and share the screen. Now, right off the bat, this is last week's changes for the past week. August 12th through the 16th, 2019, the S&P down 1.03, the Dow Jones down 1.53, the NASDAQ down 0.79, my portfolio down 0.54%. So last week was pretty nasty. I believe last week was our third consecutive week going into the red. And if you follow me over on Instagram here, I posted the changes for this week. So that's 1 red week, 2 red weeks, 3 red weeks, 4 red weeks. So we've had 4 consecutive negative weeks in a row. So really, I was expecting this week, if you watch my last week's recap, I was really expecting this week to come out positive, but it is unexpected. You never know what is going to happen. And what happened here on Friday, the Fed came out, they discussed possibly raising rates here in the future, or decreasing rates here in the future. They didn't really say it. They kind of left it open-ended. That didn't really affect the market too much. After the Fed came out, the market started moving slightly higher. China imposed some tariffs on us. They raised the tariffs from X amount to X amount. I didn't track it, write it down. That hit the market pretty hard. Right off the bat, lost about 180 points, but we started making a recovery. Then, again, President Trump came out, tweeted, everybody should be looking to move their production out of China and look elsewhere. And that is when the markets sold off hard. So it is very unexpected what the events that can take place that can really affect the market. You wouldn't believe it. It's kind of funny. But let's go ahead and take a look here at these 4 indexes. The S&P this week actually trending positive Monday through Thursday here, up 1.21% early in the week, down 0.78. Really not that bad. You can see while we did gap low on open on Tuesday, about what, down 0.8%. On Wednesday on open, we gapped up nearly that whole recovery plus some, and then towards the end of the day, we actually had a massive kind of rise and actually closed up 0.82% on the day, basically erasing Tuesday. Now, I did move my ETF, my bonds, from bonds into the S&P 500, I believe sometime on Tuesday night. So on Wednesday on open is when I started tracking the S&P with my bonds. Now Thursday and Friday, Thursday basically flat on the day. The Fed was going to be speaking on Friday, and that is all that I had really expected here on Friday. But then we had the Fed came out, they came out, discussed in the morning, but the market started to recover from what the Fed had said. It didn't really interfere with anything. Then China came out saying, hey, we slapped some tariffs onto you. Boom, the market took a hit, but it started to show some recovery there as well. Let's go ahead and go to the 1 day here. So that is not showing a great one. Let's go 3 day. Maybe this is a bit easier, but you can see here China dropped us about 180 points after the announcement. We started to make a recovery, and right here at that top point is when that tweet came out. That slowly bled the market towards the end of the day because the market does not like uncertainty, and the market can be affected by a few texts. So it's kind of interesting there. So that is basically what affected the rest of the markets. Same sort of performance here, except for Thursday. The Dow Jones did perform up 0.19%, and Friday sell-off down 2.37% there. Down for the week for the S&P, 5-day change is down 1.44. The Dow Jones down 0.99. The Dow Jones is actually one of the least affected here. The Nasdaq hit 1.83. This is in second place as far as negative this week. Basically the same performance. Our worst hit index there is the Russell 2000, down 2.29%. This one here, year to date, down to now only 8.23%, falling quickly behind the Dow Jones, now up 9.87. The Russell was almost in line there with the Dow Jones. The S&P here is in second place, up 13.57, and the Nasdaq here is in first place, up 16.83%. Now, after hours here, we can see we went into the red, and that is because Trump announced another tariff increase. So they're going to be raising their tariffs from 25% to 30% on a number of, go ahead and stop that. And then they're going to go ahead and raise their tariffs on other semiconductors and technology from items from 10% to 15%. And some of those tariffs that hadn't been slapped onto products that may affect Apple, or what were some of the other stocks? I know Apple had a big part out there. It's actually going to be coming out, and I do see Apple and some of those other semiconductor technology stocks that do receive a lot of their equipment and items from China beginning to kind of fall here in the upcoming weeks. So kind of interesting there. Jumping into the entire S&P 500 performance here for the week. This is Friday. There were only about 5 stocks that I saw out here that were positive that I was tracking. We had Boeing positive on the day at 0.45%. We also had NextEra Energy at 0.13%. Actually, utilities generally are some of the safer safer areas. When the rest of the market's selling off, you'll see some of the utilities in the green. Today, it did not matter what sector you were a part of. When everything took place, the Fed, China, the tweet, it overreacted and the market did not like it. It took all the sectors down. So every single portfolio that I saw out there was essentially negative on the day. Over here in basic materials, ticker symbol NEM, Newmont Mining Corporation up 2.10% there on the day. CRM up 2.25. I believe that is because of their earnings. Intuit, the tax preparation company here, up 1.10%. And a few others I'm sure are kind of scattered out there, but not as familiar to myself. Now, looking at the 1 week here, we can see that overall, if you look at all the sectors, there's not one sector that is just blaring out their green. We can see a few utilities, actually about more than half possibly being in the green. We have NEE, Duke Energy, Southern Company. We have XEL and WEC and a few others. But actually, utilities came out a little bit probably higher than 50-50. We have Boeing this week up 7.74%. We may have found a bottom on Boeing. I don't actually own Boeing myself, but I've seen many investors diving into Boeing, and they were just really hoping for a bottoming out point, and this could be a good bottom. We also see Raytheon up 1.31% there on the week. Avi is inside my portfolio. That actually kept my portfolio afloat. Here, when we get to our percent change for the week, my portfolio did not drop as much as the rest of my other portfolios. My portfolio that has Avi in my IRA over on Merrill Edge is the only positive portfolio of all my portfolios this week. So that one kind of kept my portfolio afloat there. We also have Home Depot and Lowe's. Lowe's came out, guided higher, beat expectations and guided higher. And you can see here up 13.28% there on the week. And Home Depot up 6.79%. CRM, Intuit, Activision Blizzard, and EA Electronic Arts also positive on the day. So really, it's sporadic. There's not one sector that was safe out there, besides utilities being a little bit higher than 50%. Financials down again this week. I know last week they were hit pretty hard. Down again pretty hard here on Friday, down 1.77%. Semiconductors, this is what affected the NASDAQ this week, down 3.15%. And again, this is tariffs we are talking about. They're going to be raising tariffs from 25 to 30%, which will affect all the common consumer areas that China had been getting taxed at pretty heavy. But now they're going to also increase a tax on electronics, and semiconductors will get affected in that from 10 to 15. So this is probably what really hurt a big sell. If you can see the volume here, big volume, down 3.15%. Home builders positive this week due to Lowe's and Home Depot. They share a pretty large percentage here, 4.53 for Lowe's and 4.63% there for Home Depot. We also had a couple other M's in there, such as Williams-Sonoma, Whirlpool, and I'm not familiar if any of these other positions were positive or negative for the week, but overall, 0.81% there positive. Now, oil, the only positive day here on oil was Monday, and whenever there is any sort of conflict or attack or some ships getting bombed and blown up, this seems to cause oil prices to rise. So there was an attack on a Saudi oil facility over in Yemeni, and that caused the one positive day with oil, up 2.28% there on Monday, and sold off everything and more by Friday, down 2.82% here on Friday. 5-day change now down 1.84%. So oil has been heavily sold off here recently, hitting highs of over $13.50, now trading at $11.19. It's really having no sort of support anywhere. It just kind of slish-sloshing there around, not finding any sort of support. The dollar was actually going pretty high for the week, kind of keeping up there. And then Fed came out, and I believe it's the Fed that should have affected the dollar here on Friday. You can see here early in the morning, the Fed didn't really cause the dollar to move low. It actually looked like it may have caused it to spike up. But when the whole discussions there, when the China and U.S. started to escalate the trade war there, that's when that dollar started to kind of drop off. So I'm not sure why the dollar would be affected by the whole mentioning there, but just kind of interesting. You can already see oil there. I'm sorry, gold positive there. Silver and gold, even though they have been highly extended here, these are continuing to climb. Now silver, I remember a point where we were saying on the weekly recaps, if you're buying silver below $14, you were probably loading up pretty crazy below that $14 point. And now silver has exploded up $16.35. But over the past 3 months, that is up nearly 20% there in the past 3 months. Gold, basically doing the exact same movement. Over the past 3 months, we have 18.85% upward trajectory. There's a couple gold miners that I was checking out. I know I posted it over in the dividend growth investing Facebook page. I posted 2 gold miners that pay dividends. They have rising revenue, free cash flow, net income. They are, I'm not sure if they're dividend aristocrats or no, but I know they pay out some dividends, and they just look very strong in this current market, but they are trading at near highs. So it's one of those things, could be possibly extended there. Who knows? With the market volatility that we have, bonds also continue to move higher, just slightly up 0.07% there on the week. Year to date, bonds are up 7.17%. Not too much data there. I know the big scare was a yield inversion, happened midday, I believe, on either Tuesday or Wednesday. I thought it would be a bigger deal, but Friday, the Fed, China tariffs, and U.S. tariffs kind of swept all that underneath the rug. Now, mortgage rates did slightly increase 4 basis points, moving from 3.81% a week ago up to now 3.85. This is still a great time to refinance. Just make sure that when you're refinancing your fees, go through a calculator that will assess how long you will need to live at your current home in order to make up the actual reduction. I forgot the whole terminology. I know I've done it in the past where I looked at my own home and was it worth refinancing to take those fees to restart my amortization and it really wasn't worth it. If I could reduce my rate down to 3.25, it wouldn't really make it. I think that's what my rate is right now, 3.25%. So it doesn't really make too much of a difference unless I can get down into the maybe low twos or even the ones, which is unlikely right now. Now, going through some of the news here that was posted this week, I posted a little asset class returns. Now, I specifically kind of mentioned large cap. If you invested in these large cap, the large cap here is in the orange. Look at how the orange never falls into the lower end, but it never really goes into the high end either. It usually kind of hovers in this mid area, which is I like to hold large cap companies, whereas real estate investment trusts, while we like to invest in them, they provide a high yield. They often provide a safety net in times of recessions. We can see here, while they do trade near some highs sometimes, they also lose a massive amount in the lows, down 37.7 there. 15.7% there were the rest of the market, the emerging market, and the large caps were up 5.5% and 39.8. So I thought it was in kind of an interesting graph there to kind of check out. Now, I did get a bunch of actual bumped notifications this week. I know my wife went and was shopping at Barnes & Nobles. They got a water and a cookie for the kiddo, and we got Starbucks. I'm now a shareholder of Starbucks through the Bumped app. I also got some Taco Bell, Yum stocks, the McDonald's stocks, and some Lowe's stock. I think I picked up some steaks for the yard. I'm putting down some black tarp and some rocks in my backyard to enclose my grass around so it makes it easier to mow. So I got some Lowe's from going out and getting some items for free, some free stock out there. President Trump coming out there. I don't see Apple falling due to tariffs. Okay, so Tim Cook and President Trump were talking about not imposing tariffs on China because it would affect Apple. Well, this was Sunday going into the week. Again, no one foresaw what was going to happen on Friday. I had no idea China was going to come out and slap the US with China. And of course, once that did happen, we knew immediately that President Trump was going to more than likely be out there tweeting something and it would rock the market. I saw a lot of chat in some of the Discord channels that they made a lot of money shorting and buying up some Boeing options. So very interesting there. Slow drip today. So Monday, I believe it was actually Tuesday, August 20th, that was Tuesday. Basically a bit of a slow sell-off. It wasn't a sell-off. It was just basically a downtrend. They were just kind of waiting for the Fed to come out. So some of the keywords there, I think I talked about this on my Monday or my Wednesday video. I switched my bonds. So I had about 15% of my portfolios out there in bonds, and I had a picture here. So I had about $10,000, almost $11,000 in bonds, and by having switched earlier, maybe a month or two ago, from my S&P 500 fund, I sold out of that fund. I'm not sure where I sold it out of, but I moved it from the C fund over into the G fund. And during that time that it had been invested in bonds, it had been basically positive every week over these past few weeks. It had actually grown in equity by about $300. So when I made my conversion from bonds back to the S&P 500, I was able to have not shaved what the market had shaved off, a difference of 3.1%, or basically kind of saved myself $331 in equity from having done that. Plus, when I reverted back from my G fund back to my C fund to jump back into the S&P 500 fund here, my shares went from 245 to now I believe right around 254. So actually increased my share count. The market goes higher, I'll have a higher percent increase there based off the more equity. So it was a nice little change there. I don't see the market tanking yet. I think the Fed will step in here end of September, raise rates. The tariffs, they always scare the market here in the short term, uncertainty, but I do believe the market still is going to be continuing to move higher here in the short term. In the next 3 to 6 months, I think is what I had kind of said. End of September, I do see us hitting new all-time highs, and we'll see how that kind of plays out. I know Friday kind of hit me for a loop, so I won't go any deeper into there. So which will pop first? What do you think will pop first? Do you think the stock market will pop and explode and we'll have a 20%, 10-20% correction? Do you think the bond market, the debt market will pop? Or do you think gold and silver that has been, every single market. If you look at the S&P 500, we're 6% off all-time highs. If you look at the bond market, it's heavily extended. If we look here at bonds over the past 6 months here, look at where bonds are at. Bonds are trading at all-time highs. It looks heavily extended. If we look at gold and silver, we already saw that. They're extended as well. At what point does the stock market or the bond market or gold and silver, the material sector there, which one's going to fall first? Let me know in the comment section which one do you think is going to be falling first. And I do believe that's what's going to end up pushing the market higher. Something's got to give. Either gold and silver are going to fall, the bond market's going to fall, and it's going to push investors into the market, and that's what's going to drive the market even higher with the Fed cut. I bet a Fed today, so I kind of went out and put some notes about the Fed meeting that took place. Now, the Fed kind of left it open-ended to lower interest rates in the future, and the past rate cut shouldn't be viewed as a preset course, but just as a needed alignment. A calibration is what they kind of use here. Calibration. So I put some notes there for the article for the Fed Reserve minutes and also target and lows article there. Kind of interesting. Now, I got paid on the 21st, which was Wednesday. Google paid me out. Thought that was interesting. You should always create different streams of income. If you're out here working W-2, create different streams of income, either through YouTube, affiliates, start a business. If you want to go out there and mow lawns, I know there's a lot of stuff you can do. There's just so many opportunities. You just have to go and look and try and fill fill something. You find something that needs to be, I don't know, there's a saying for it, but you can do anything you want and just create different streams of income. And I thought that was kind of nice little share. SKT, I know I've been posting about this one here for a bit. This is Tanger Factory Outlets. They had insider trading or buying at this $14 point. I don't want this stock to be one where investors here on the channel see these videos, watch my portfolio, buying this specific stock, don't do their own research and buy into it. I did see a couple other channel creators starting to buy SKT, so I'm not sure if they're doing the research on that or if they're just going off. I don't ever want anybody here on the channel to be just buy positions that I am buying, because there's different mindsets and there's different plans. Like, my plan and goal is not always going to match up with what your plan and goal is. And my portfolios, my M1 Finance account, which holds a lot of single stocks, it holds 34 single stocks within the account. That makes up it makes up a portion of my total portfolio. And while I like to kind of showcase that, it is just a piece of my total portfolio, which includes probably more funds than anything right now than what the single stocks in that account show. And then, of course, I had 15% in bonds that were moved over to now the S&P. So that's about $11,000 that was moved over back into the S&P 500. And that's almost, that's more than half of what the M1 Finance account is. So, yeah, just different things there to kind of consider. Altria raised their dividend from 80 cents to now 84 cents. That's an increase there of 5%. Their yield is now 7.25% yield. Now, a couple other companies that raised their dividend so far that I am tracking here in the month of August is JP Morgan, going from $3.20 to now $3.60. Simon Property Group going from $8.20 to now $8.40. Altria, $3.20 to now $3.36. So bam, I just made a dividend raise there. I made about $4 to $6 off those dividend increases just by having the dividend increase. My dividend income going forward increased by about $4 to $6. So it's slowly compounding, but it's such a tiny little portfolio set aside for dividends, but it's still be fun. So I knew that Friday was coming up here, and I like this little meme here. So everyone's excited for Friday because it's normally payday, but when you get paid, there's always bills that are due right away. So bills came in and said, nope, I get paid tomorrow. I made the longest video on this channel. I actually got a lot of views. I was actually surprised. I put the video out very long, 41 minutes, going over 18 dividend aristocrats having grown and paid out dividends for the past 25 years or more. These were all trading below their 50-day, 200-day simple moving average, and higher yields on average for the year. We also cover the PE, price to book, price to sales, and a lot of information, just a ton of information. That video so far on the channel is at over 200 views. So very nice there here on the day. I think that was pretty good. First week in the wait. So I thought this was, I thought we were going to have our first green week in 3 weeks, but nope, the Fed came in and their normal effect had made the market basically unmoving. Yes, we lost it, but we were going to be recovering. Then China came out and smacked us, and the tweet came out and smacked us more, and it kind of smacked the market down. So that's Friday for us. M1 Finance changed their dashboard a bit. There's my video on the dividend, the 18 beta aristocrats. We also have I sent an email to M1 Finance where I basically just did it on the bottom there, the contact method. If they could add a year-to-date option. I know on the tab it goes 1 day, 5 days, or like a week, the 1 month, the 1 quarter, and the 1 year. I would really like to add a year-to-date. My Merrill Edge platform has it, my 401k has it, all my accounts have this option to look at my year-to-date performance, and I would really like M1 Finance to add that feature in there. I would like to see how that portfolio is performing year-to-date in comparison to my other accounts. So I sent them a message there. And then this week's changes for the week. The S&P 500 down 1.44%, Dow Jones down 0.99%, the Nasdaq down 1.83%, and my portfolio down 0.68%, being kind of kept afloat there by AbbVie. I have a fairly large position in AbbVie, around 64, 65 shares, so it's about $4,000 or so, if not more, and that's what kind of propped this portfolio higher this week. And then I had a few other positions out there and a couple other accounts. But that is basically it for the video. Let's go ahead and swap over to the full screen here. There we are. So that completes this week's weekly recap for August 19th through the 23rd, 2019. Let me know, what do you think the market's going to do next week? We left off this week after hours with President Trump coming out saying that we're going to be raising tariffs. I do believe Monday will be negative. I am going to be making my Monday video going over what stock I'm going to be buying here on Monday. I will let you know, obviously, here on the video, but I don't have one in mind right now. I'll have to look at what stocks are coming up on ex-dividend, how the positions have currently changed here on Friday. Maybe there's some new opportunities that have allowed me to invest in company that I may not have been able to invest in the past due to its higher increased price, but maybe it did come down here in the short term. So I will be doing that here in the next few days. Now, if you have not yet subscribed to the channel, I would highly appreciate it if you do hit that subscribe button below, red icon right underneath this video, hit it and you'll be subscribed to the channel. Also hit the notification bell to get notified every time I release a new video. If you did enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, would like to let me know what stocks you are buying this week or what's on your mind. How did the market affect you this week? Were you emotionally affected? Did you not mind this volatility? Did you buy anything this week? On Friday, were you looking forward to some more red? Let me know in the comment section. I always appreciate all your feedback, and that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.